Aloha, everyone. The stock market put in a decent session on Monday. However, once again, my problem is volume. The Nasdaq continued on its move above the 50-day moving average, which is a good sign to see. But volume was lower than the session before, and the same thing with the New York Stock Exchange. And even though it was down for the day, it was a nice intra-day reversal for the New York Stock Exchange. S&P 500 actually up on the day with the Dow Jones Industrial Average. So overall, it wasn't a bad session, wasn't a great session. It was a good, decent session. But my problem also continues to be that the Russell 2000 continues to lag, and as you can see, the relative strength line, the thick white line, while it's not looking good, we're starting to get very oversold on the moving average convergence divergence. So we'll see if that portends to a larger bounce here. But overall, like I said, the charts just aren't the same. They just don't look as good as they did throughout 2013. And while that could definitely change, I'm starting to see some silver and gold stocks start to move. And whenever I see that, I don't think that that's really ever a good thing, especially considering that they've been downtrending for a very long time. And we can look at the GDXG, the GDX, and you can just see that gold stocks appear like they want to start moving up. So that's always interesting. But you know, whatever. We'll see what happens. It's really hard for me to be confident. I said that we might get very choppy here a while ago, and while it's not choppy, we're in a very narrow range. And until we break out to new highs or break to new lows, it's going to be hard to say what the market really wants to do, obviously. However, a failure here for the NASDAQ below the 50-day moving average and a failure at the Russell 2000 without it touching the 50-day moving average, I think would be quite a large tell that I'd say more than likely are going to see the 200-day moving average. But we'll see. Anything can happen. On the bad side, CLFD, we got a 25% sell signal in CLFD. I know it's kind of closing at the 20-day moving average, but you know what? I'm going to count that as a clip below, only because volume is so heavy, and it's really started to pick up in the last 3 sessions, as you can see, and it's not quite the same chart we had. So I don't mind selling off 25%, even though we just sold off 25% just 2 days ago. Really, it's just, this market, once again, I'd rather get out of weak stocks and try to find better ones. Speaking of that, wage, technically it'd be a 25% sell if it would have closed either, you can nitpick here, either 54.99 or 54.77. I don't care. If I would have seen it under 54.99, I would sell another 25%. But with the heavy volume, while it does seem prudent, if you want to, maybe 20%, I'm going to go ahead and wait for eclipse of the recent lows. But wage is looking like it's going to be a sell tomorrow, so keep an eye on that one. I do have one new long position, CAK. My thing with this one is that it's a very inexpensive security. There's really no fundamental or earnings reason for the stock to move higher. However, it's been in a very nice uptrend. It's under clear accumulation. This is a weekly chart and is giving a pocket pivot point buy signal somewhere right near off the 50-day moving average. And energy stocks are starting to move. Once again, with gold stocks, like I said, I don't see how that's that bullish. And with that being the case, CAK, I'm going to go ahead and put 1.5% of the risk account in there. And we have an add position to INO. INO is a biotech stock that's got some pretty huge revenue growth lately. Mutual fund ownership is increasing. Earnings are a bit off. And with this one already being a current holding of mine, I don't mind putting 2% of my account value in it. If it fails, yeah, I won't be surprised. But to me, it's worthy of a shot, even in this kind of market environment, just because stocks are technically in the extreme short term trending above the 50-day moving average on the NASDAQ, and biotech stocks continue to hold up. As you can see, the XBI and IBB are holding in there. Biogen continues to do well, and Alexion, 2 current holdings of mine, continue to do well. So as long as biotechs are doing fine, I don't think the market's done. But as soon as you start to see biotechs start to weaken, and if we see gold stocks going, that might portend to more downside. But right now, stay very neutral, my friends. It doesn't pay to be a bull or a bear here. Cash is the preferred choice right now.